morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. This week has seen an immensely turbulent time in the market. Trading floors throughout the world were overwhelmed by fear yesterday as investors pulled cash out of risky assets and sent stock markets plunging further into the red. Around $1.2 trillion has been wiped off the value of global equities since the start of the week, with banks bearing the brunt of widespread concern that another recession could be on the cards. In the US, the majority of shares closed in the red, with Bank of America down nearly 7% and Citigroup down 6.4%. Yellen's two-day testimony did not aid the panic, finishing her speech with a downbeat tone. The US 500 dropped 9 points to close on 1,834.05. The US Tech 100 was the only index to rise, gaining 17 points to close on 3,974.93, and the Wall Street lost 149 points to close on 15,703. In commodities, gold is regaining its status as a safe haven as investors rush to the precious metal. Gold jumped $42 yesterday to close on $1,240.5. Brent crude, on the other hand, had a rather negative day, however rallied late after the US Open to close up 16 cents, closing on $31.13 a barrel. Due to the fall in demand in commodities, seaborne trade, measured by the industry in 20-foot steel boxes, was meant to expand 7% to 182.1 million units, the strongest growth in 4 years, anticipated by Clarkson plc by the end of 2014. The actual increase turned out to be less than half that amid weakening global growth, according to the world's largest shipbroker. With fleet capacity also swelling, rates for the ships have slumped. Many of the world's busiest container shipping routes are suffering from the slowdown in emerging markets and weak growth in Europe. China's economy grew at 6.9% last year, the slowest since 1990. Europe's predicted 1.5% expansion in 2015 would be among the weakest globally, with little expectations of a turnaround. In Europe, banks lost more than 6% yesterday. French giant Société Générale suffered the sharpest drawdown, down 12.6% at close after releasing its latest financial results. British banks fell to a 7-year low, shedding another 5% off their current market value. And UK government borrowing costs fell to record lows yesterday, and sterling slumped to a 15-month low. The Germany 30 had a downward day, yet closed flat on 8,889.5, and the UK 100 dropped 41 points to close on 5,570.9. In today's corporate news, Rolls-Royce has slashed its dividend for the first time in 24 years, cutting it to 16.4 pence. The UK's competition watchdog has fined pharma companies, including GlaxoSmithKline, £45 million for conspiring to delay the entry of a generic drug between 2001 and 2004. Commerzbank has announced its first dividend since 2007, as fourth quarter profits came in better than expected. Today's economic data in focus: at 7 a.m. the German GDP was released, at 9 a.m. European GDP was released, at 10 a.m. European industrial production will be released, and at 1:30 US retail sales will be released. That's all for this morning's market update. Thank you and goodbye.